What's going on, everybody? I can't believe the news that's coming out of Washington. Biden is going after the real estate industry in ways we've never seen before, and it's much worse than anything I've ever expected. This is going to have a huge impact not only on real estate investors, but on every single real estate asset nationwide. As always, please consult your attorney or CPA on anything related to your personal situation. But let's dive in and take a look. But before, please subscribe to the station and like the video if you think this is interesting. Biden's trying to raise money for a lot of new programs, one being preschools. As a father of a 2.5-year-old, I think preschools couldn't be more important, especially seeing how expensive it is to have a young child and have them get some care for them. However, going after the 1031 in real estate is going to have a ripple effect in the economy that I don't think we're ready for. Looking at this article at Forbes, Biden is saying this can raise a lot of money for his programs. However, I'm not so sure that's going to incentivize people to continue trading property, thus giving that big tax raise. But first, let's look how a 1031 exchange actually works. Let's say, for instance, you bought a property 10 years ago for $550,000. You got to depreciate that over the 27.5-year life, which is $20,000 a year. 10 years later, you go to sell that property at, let's say, $1.25 million, because you've seen a lot of gains. What we're really not talking about in all these articles is the depreciation benefit. This is one of the biggest benefits when you get to trade up your properties. So, you depreciate your property $20,000 a year, which is a non-cash expense. So right now, 10 years later, your adjusted basis on the property is $350,000. When you go to sell it for $1.25 million, you have a gain of $700,000, and you have total depreciation over the last 10 years of $200,000. Right now, there's a depreciation recapture tax of 25%. So when you go to sell your property 10 years later, you pay 25% of that $200,000 or $50,000 in depreciation recapture tax. On the $700,000 of gain, right now you'd pay a 20% long-term capital gains tax or $140,000, which would be a total tax of $190,000. What we saw in the news last week was that the capital gains rate may be going to the higher ordinary income brackets of closer to 39%, which is even going to drastically increase that tax bill. However, with a 1031 exchange, you can defer all of those gains until death. Diving back into the 1031 exchange and what they're trying to do in Washington is limit the amount of gains that you can defer in a transaction to $500,000. Why is this a problem? Well, first, in this Market Watch article, it says that 47% of these 1031 exchanges are small-time investors. Often mom and pop investors who want to trade a small property, possibly to a triple net lease property that's easier to maintain and manage. Why this is a great thing for investors is that you can take that building we talked about that's valued at $1.25 million, take your gains of $700,000 and go buy a property for, say, $3.5 million. Now you're depreciating a much larger asset and you get more of that depreciation expense. If we can't do these trade-ups, it's going to drastically affect the volume in which people are willing to buy and sell their properties out there. Is that it's also going to incentivize people to go after smaller assets to keep their gains under $500,000. This is a huge problem because we're already seeing drastically low supply in the market for single-family homes and first-time home buyers. If investors are now incentivized to go buy smaller assets, well, this is just going to add to the problem. The Republicans aren't going to support this, and with Democrats having a very slight edge in the House, it seems rather unlikely this will pass, but if it does, it could have a huge ripple effect for real estate everywhere. We'll continue to follow this closely and give an updated video as we get more information.